Banks around the world were collapsing. Deposits far outpaced reserves. Credit was frozen. Panic was spreading across continents. And then war. First 1914, then 1939, each time. As soon as the first shot was fired, the financial system was rescued. Bad debts were swapped for government bonds, money printing began, and insolvency vanished overnight. It was a pattern so brutal and effective that history repeated it again and again. Now, in 2025 to 2026, the same stressors are building, crushing debt, over-leveraged banks, global instability. The question isn't if history repeats, but when, and whether the next reset could again ride in on the battlefield. What happened next, after the war declarations sealed the deals? How did nations trade bombs for bank bailouts? What might come in 2026, and can you see the warning signs before it strikes? Stay with me till the end. If you want to understand the true cycle behind banking crises and war, and how it could shape your future, hit subscribe. In early June of 1914, the world looked calm on the surface. Stock markets were booming, banks were expanding, and politicians insisted that the global financial system was stronger than ever. But behind the scenes, the numbers were falling apart. European banks had multiplied their deposits fourfold. Yet their gold reserves, the backbone of the entire monetary system, had barely doubled. It was a ticking bomb, and everybody inside the system knew it. Bank executives whispered about liquidity problems. Governments quietly discussed emergency plans. And regulators pretended nothing was wrong, because admitting the truth would spark a global panic. Then, almost overnight, the illusion cracked. The London Stock Exchange froze, trading. Banks from Vienna to St. Petersburg began running out of gold. 40, then 50 countries experienced simultaneous banking crises. The system wasn't wobbling, it was dying. Bankruptcies were just days away. Depositors were demanding withdrawals. The gold standard was suffocating the system. And without a massive reset, the financial world of 1914 would have collapsed in a matter of weeks. But that collapse never happened, because on August 4th, 1914, Britain declared war on Germany. And within 24 hours, the crisis that should have destroyed the global banking system simply vanished. Gold withdrawal requirements were suspended. Emergency government guarantees were rolled out. Central banks were granted extraordinary wartime authority. And the same financial institutions that were insolvent on August 3rd were magically rescued by August 5th. War did not disrupt the banking system. War saved it. Here's the part your history teacher never mentioned. This wasn't an anomaly. It was the first visible cycle of a pattern that would repeat again and again across the next century. By 1939, Europe was once again drowning in unpayable debts. Banks were holding mountains of defaulted Depression-era loans. The U.S. had devalued gold. Britain was losing control of its empire. Credit markets were freezing. Collapse was imminent, till World War II erupted. And just like in 1914, the moment war began, the financial rules changed. Governments borrowed unlimited amounts. Banks swapped their toxic debt for government war bonds. Central banks printed money on a scale never seen before. Once again, crisis was transformed into wartime stimulus. After the war, politicians claimed victory rebuilt the economy. But the truth is that war absorbed the financial losses that would have otherwise wiped out the banking system. Fast forward to the late 1960s. America was trapped in an impossible dilemma. The dollar was pegged to gold under the Bretton Woods system, but US spending far exceeded its gold reserves. European nations began demanding gold for their dollars. France even sent a battleship to New York to physically retrieve its gold. The banking system was strained, the dollar was weakening, and the gold standard was seconds from collapse. And what happened? The Vietnam War escalated. War spending allowed the U.S. to flood the world with dollars. Banks stuffed with dollar-denominated assets were protected. Inflation surged, but the financial system didn't collapse. Then in 1971, with the war still ongoing, President Nixon ended the gold standard entirely. The banking system breathed again, the dollar survived, and the reset was complete. For cycles. For moments where the banking system sat on the edge of an abyss. For times when war-timed almost too perfectly delivered the solution. But the pattern doesn't end there. In 1990, the petrodollar system was under threat. Oil-producing nations were showing signs of shifting away from dollar-denominated pricing. The dollar weakened. Banks dependent on the dollar's global dominance were at risk, and within months, the Gulf War began. The U.S. won decisively. Oil remained priced in dollars. The petrodollar system, arguably the most profitable financial invention in modern history, was secured for another decade. In 2003, once again, oil pricing discussions threatened the dollar. Once again, the U.S. military intervened. And once again, the dollar's dominance and the banking system, built on top of it, received another extension. You're told these wars happened for moral reasons, geopolitical reasons, national security reasons, and yes, geopolitics is real. But beneath those layers sits a deeper, older machinery, the war banking cycle. A cycle where financial stress, collapsing credit, and systemic insolvency line up strikingly close to the moments nations choose to go to war. Because war does something no peacetime policy can do. It resets balance sheets without formally admitting failure. It converts private losses into public spending. It revives failing banks through government borrowing. It justifies unlimited currency creation. It allows politicians to rewrite financial rules under the banner of patriotism. War is the only moment when the public willingly accepts economic actions they would normally revolt against. And now comes the unsettling part. Every condition that preceded previous war banking resets is present again today. Global debt has reached levels no mathematician believes are payable. The U.S. owes $37 trillion. Interest alone threatens to breach $2 trillion per year. Banks are stuffed with long-term bonds worth far less than their printed values. Commercial real estate is imploding. Nations from Europe to Asia are drowning in debt to GDP ratios that rival the 1930s, and central banks, having printed trillions over the past decade, are running out of tools. Meanwhile, geopolitical tensions are rising in ways eerily reminiscent of the early 20th century. The US and China are locked in a cold tech war. Russia and NATO face off across Eastern Europe. The Middle East is volatility stacked on top of volatility. The South China Sea has become the most militarized waterway on the planet. Trade routes are shifting. Alliances are fracturing. Nations are stockpiling gold, commodities, energy reserves, moves that historically occur, not before peace, but before conflict. And all of this is happening as the financial system approaches its breaking point. Derivative markets are overstretched. Liquidity is vanishing from bond markets. Banks are once again sitting on losses they cannot report honestly. The Federal Reserve, ECB, and Bank of Japan are trapped between inflation and insolvency. The math simply doesn't work, which leads to the question that historians whisper about but economists refuse to touch. If the war banking cycle has repeated every time the financial system faced collapse, what happens now? Because the timing is eerily familiar. The tensions, the debt, liquidity crunch, political desperation, the multipolar world, the banking fragility. All of it aligns with the earliest stages of the same cycle that began in 1914, 1939, 1965, 1990, and 2003. Is conflict inevitable? Not necessarily. But the incentives are aligned in ways that should make every student of history pay attention. Because if the cycle repeats, 2026 may not be remembered for inflation, interest rates, or elections. It may be remembered for another pivot point in the war financial system timeline, a moment when collapsing balance sheets, political pressure, and global tension create the perfect storm that has triggered every previous reset. History doesn't repeat exactly, but cycles do. And this one is nearing its inflection point. If you want to understand what happens next, how these cycles end, and what they mean for your savings, your assets, and the next decade, stay tuned. This story is far from over.